PayPal Holdings just reported their Q2 results after the market close, and the street is not happy with these numbers. Shares are down nearly 7% in the after hours. We'll dive into their key financial highlights, take a look at it from this most recent quarter numbers, dive into some key metrics from PayPal and why I think this is one of the most misunderstood and misvalued stocks in the market right now. We'll obviously take a look at it from a technical chart pattern and why I think this one might be the best buying opportunity since Meta was last year. As always, if you guys are new to the channel and find this type of content valuable, be sure to hit that like and subscribe button for more. We are on the road to hit 100 subscribers and it would mean a lot. PayPal Holdings, ticker symbol PYPL, just reported their earnings. Shares are down big. This one has a market cap of roughly, this one's not updated, so roughly now 77 billion after the move in the after hours. And this forward priced earnings also would need to be updated, probably trading closer to a 11 or 12 times price to earnings on a forward basis. On a year to date, PayPal has actually underperformed by a lot to the market. As you see the NASDAQ and the S&P and the overall market and large cap soaring, PayPal has actually given you negative returns, down nearly 2% year to date. And considering how high inflation's been, this real rate of return is probably much deeper than just 2%. Over the past 1 year, this one is also down 18%. So we'll take a look into the numbers and see if this 7% downward move is actually justified, or is this a great buying opportunity. Taking a look at the numbers for this most recent quarter, net revenue is coming in at $7.3 billion. That's roughly 7% growth on a year-over-year basis. Estimates were closer to 7.27 billion, so a roughly $30 million beat on that revenue side. Non-GAAP EPS coming in at roughly $1.16. That came in line with analyst expectations. Also $1.16. That was 24% growth year over year. So revenue is growing roughly 7% and EPS, non-GAAP EPS growing roughly 24%. You know, PayPal drove some efficiencies in their business. Operating cash flows did turn negative for this most recent quarter, but that's largely due to a $1.2 billion headwind from European buy now pay later service that PayPal is looking to sell, and that's expected to be closed in the second half of 2023. And PayPal also said they'll be receiving roughly $1.8 billion in proceeds from the closing of the sale that they can use to bolster onto their balance sheet. PayPal does provide forward-looking guidance, and so for Q3, they expect net revenues to grow roughly 8% on a spot basis, up to $7.4 billion. The street was closer to $7.33 billion, so a beat on forward revenue estimates as well. And non-GAAP EPS expected to grow roughly 13 to 14%, close to that $1.22, and that came in line with analyst expectations. Full year EPS guidance coming in at $4.95, in line with analyst expectations. They do expect to repurchase roughly $5 billion worth of common stock for the full year 2023. And considering they have a 77, roughly, you can even say $80 billion market cap, $5 billion is roughly 6% of their market cap. And so while the EPS numbers are expected to have strong growth, it's likely supposed to be higher considering the pace of their share repurchase program. And so even just taking this $5.67 number, if you apply that to the current share price, you can see PayPal is trading at roughly a 12 times forward earnings. And in my opinion, I think that is wildly undervalued considering they're expected to have strong double-digit growth for the foreseeable future on their EPS side. Net revenues we see coming in at that $7.3 billion number. That was good for 7% growth year over year. And one thing I want to highlight in their operating expenses is, apart from transaction expense, they were able to control expenses on every other line. So you see transaction expenses did rise roughly $500 million. However, you take a look at credit losses, down. Customer and support operation expenses, down year over year. Sales and marketing, down year over year. Technology R&D, down year over year. G&A, down. Restructuring, down. So apart from transactions, they were able to control their costs on every other line, which on higher revenue, which means they certainly drove efficiencies in their business, and that certainly helps their operating expense and in turn their operating income, which went up from $760 million same time last year all the way up to $1.1 billion. And so even those operating margins roughly went from 11% up to 15%, a nearly 400 basis point jump on those operating margins, which you love to see. Their net income for this most recent quarter was bolstered by a one-time benefit in this last quarter and compared to a one-time loss they experienced same time last year. And so this net income on an EPS basis does look a bit outweighed. However, I do want to point out that their weighted shares outstanding have been steadily going down, and PayPal had a 5 billion share repurchase program last year, and they have a 5 billion share repurchase program for fiscal year 2023, which should certainly be favorable for investors as they're returning almost all of their full year free cash flow in the ways of stock repurchasing. Moving on to PayPal's balance sheet. Now, this is one point I do find concern with PayPal in, that their balance sheet is not very strong. Cash and cash equivalents are at $5.5 billion. That's down roughly $2.5 billion from 6 months ago. Total current assets coming in at $54 billion compared to a total current liabilities of roughly $41 billion. So a current ratio not over 2, which is ideally what we would like to see. They also have a good amount of long-term debt, roughly $10.5 billion. And so they don't have more cash than debt on the balance sheet. And so while this balance sheet isn't great, that's largely because PayPal has been putting nearly all of their free cash flow in other shareholder-friendly returns, such as share buybacks. And so certainly if they stop doing share buybacks, they can bolster on more cash onto their balance sheet. And it's important to keep in mind that sale of the European buy now, pay later service will result in roughly $1.8 billion worth of proceeds that they can use onto their balance sheet. Moving on to the statement of cash flows, we have that $1 billion net income number, and we do know cash flows for this most recent quarter did turn negative, roughly negative $200 million, but that was largely due to a one-time expense they saw on the sale of their European buy now, pay later service. The other thing I want to highlight in the statement of cash flows is their purchase of treasury stocks. So for this most recent quarter, they bought back roughly $1.5 billion worth of stock. And over the last 6 months, they've bought back nearly $3 billion worth of common stock. And so certainly when the stock has been underperforming so heavily, you do like to see PayPal buying shares for as cheap as they can. Moving on to a key metric I wanted to highlight, and that is total payment volume, or TPV, which grew at roughly 11% on a foreign exchange neutral basis. And we see over the last several quarters, total payment volume has steadily been rising. And this is a good sign, as total payment volume and transaction volume is largely how PayPal will continue to drive revenue growth. As they continue to have more payments flow through their system, they'll be able to increase those revenues at a relatively similar pace. We see TPV increased at 11% and revenue subsequently increased at 8%. Peer-to-peer total payment volume increased at 2%, and for Venmo specifically, total payment volume increased 8%. And if you didn't know, PayPal does own Venmo, which is the second most popular financial app in the US, right behind Cash App, which is owned by Square. And so Venmo is a big driver for PayPal down the road. They do own other services such as Zoom and Braintree. Another key metric I did want to highlight is active accounts and transactions per active accounts, or TPA. And we see for the last few quarters, active accounts for PayPal have saturated. Back in Q1 of 2022, they were sitting at roughly 430 million active accounts, and now they're just sitting at 431 million active accounts. So you see that they've stopped growing in terms of active accounts. However, their transactions per active account have steadily been growing. That saw roughly 12% growth year over year. And that is what you like to see. And so when you see headlines like this, where PayPal stock slides, active accounts slip, or total active accounts dip, I think investors, and some investors, are missing out the fact that, yeah, their active accounts are not growing. However, they're driving more transactions through the existing active accounts. And that's exactly what PayPal has been saying over the last few quarters, that they're strategically focusing on driving higher activity levels with existing active accounts. And I think that's a good thing, because there's no point in aimlessly growing active accounts when their transactions aren't rising through them. This is another piece of news I did want to get into for PayPal, which could be the reason why their stock is reacting negatively in the after hours. If you didn't know, PayPal CEO Dan Schulman is expected to be leaving the company at the end of this year in December, and they have not found a CEO to replace him. And so that's one thing investors are sort of getting frustrated with, is that the lack of urgency on the CEO search. I'm not sure in the conference call this quarter they'll announce who the successor would be. I doubt it, as that should have been in the press release. However, this is sort of a cloud hanging over PayPal, that we don't know who the upcoming CEO would be, and it's sort of taking investors off guard, because it's such a well-known, such a strong company, that they should have been able to find a CEO by now. Moving on to the technicals for PayPal. Boy, this one has been ugly, and I just want to point out it has a very similar chart pattern to what Meta had last year. Now, I'm not saying Meta is a representation of what PayPal will do down the road. However, I do think it's in a similar position where, look, there's a lot of negative news around PayPal. Their CEO's leaving. They've been posting declining earnings over the past few quarters in 2022. However, the story is expected to turn around at PayPal. They're expected to resume strong double-digit EPS growth and strong single-digit revenue growth. And so I'm actually a fan of PayPal continuing to sell off, as we can pick up shares at a much, much cheaper price. And so in terms of a technical chart pattern, this one is trading at roughly 68 in this downward channel. It did seem like it was making a comeback since May. However, after these moves in the after hour, this one is looking like it's going to reverse its course and head back down into the bottom range of this channel. The first level of support for PayPal stock I see is roughly at this $60 mark, which was its previous lows, and it did seem to bounce off of those recently. Below that, there's not a whole lot of support. You have to go back as far as 2017 to see where PayPal was at these levels. And so certainly if it breaks through that $60 support, it can come down in quite a hurry. Now, I do believe in PayPal for the long term. I do believe in the strength of their business. Their fundamentals have been improving. They have solid revenue and very strong EPS growth. I believe management will be able to find a successor and turn around this business, which should ultimately reflect in their stock price. In terms of where I would look to pick up PayPal, it's certainly within this downtrending channel. Even at these levels, I think PayPal is quite undervalued, and so I wouldn't mind picking up shares at the $68 range, at the $60 range. I think this is a position that you can build out over the course of 6 to 12 months. I think the clouds around PayPal will slowly start to disappear as they name a successor to Dan Schulman, as they show continued quarters of strong EPS growth. I think they're putting their money where their mouth is and continuing to do these share repurchases at such a low price. That was my take on PayPal. I do think this is one of those highly misunderstood stocks in the market. I think Meta was in a similar position last year and has seen stellar outperformance this year, and I'm hoping PayPal can deliver the same. I am a believer in this one and will be picking up shares at any price below $70, and so as it continues to go lower, I wouldn't mind picking up more and more shares of PayPal. I do believe in this one for the long term. Let me know what you guys think of PayPal in the comment section below. Are you buying the dip on this one, or are you staying out of this falling knife of a stock? As always, thanks so much for listening, and I'll see you guys in the next video.